Hey everybody, it's Pete. Welcome to this episode of today's best stock picks. We're going to be creating a game plan for Friday. The week is flying. Friday, April 18th, 2020. And the theme for today's trading, if you're a day trader, is we were stuck in neutral. A few stocks actually exploded to the upside, had decent mornings. We'll take a look at them. One or two stocks that had earnings today actually had some pretty good days. United Health is continuing to follow through. But what's super interesting right now is we've discussed it briefly about the difference between trading stocks, options, and futures, and the monster advantage to trading futures when there's an obvious trend because of the extra leverage you get with the margin and everything like that, and the way you can capitalize on obvious moves with lower margin cost than, say, buying 1,000 shares of the SPY ETF. The upside to that is really big if you know what you're doing, if you can handle extra leverage and you have discipline and a strategy. The downside is what we've seen in the market the last 4 days, specifically the SPY. We're gonna take a look at it in three different time frames. We're going to look at the hourly, the daily, and the weekly to really drive the point home and also set a tone for Friday's trading. But what I think was super interesting today, I don't know if you happen to have caught it, yesterday's image that I put up on the cover of the YouTube video was a teddy bear. And all you hear about is how bad the market is, how bad the market is, but we're not going down. It's so I was making a joke at the bear is just like this soft cuddly thing and nothing to worry about. And today we kind of saw that again. There was some news that came out, a couple of different things that came out in the middle of the day, specifically one that I'm going to talk about in a second. I'll show you the headline to discuss the fact that when you read the tape and don't project what you think should happen onto the market, you actually see both ways and you have much easier trading because you're not fighting them. You know, like I'm sure we've all done it, like mentally trying to make the market go up or down depending on your position. So anyway, I'm gonna touch briefly on the story that I'm referencing and come back really quick. So this is the story that came out. You can see it was like 10:30 in the morning or whatnot. And this is the part that's obviously and is now out of money. And then at the same time when that happened, the market was actually going down. JP Morgan had some nice intraday setups that pushed lower right out of the gate. And this came out, and you would think that, okay, here's some more fuel to the downside, more bad long-term economic type news, and we got a rally. We actually rallied straight to new highs in the SPY, which was kind of, you know, we were sitting there in the chat today with everybody in there trading together, and we're like, what just happened? And it was just one of those things where as just short-term day trade, there was probably 3 or 4 times during the day we were like, okay, I don't know why it happened, but it did. But thank God, thankfully, if you had discipline, it didn't make a difference because it really wasn't a super great setup. We were kind of floating around, but we kind of like went just out of nowhere. And ironically, we'll take a look at the chart. We actually went from the low to the high to the low again, and now we're up again after hours. So my point is this, and I've discussed this before. Futures are great when the market's trending or when you can identify a good trend. If not, you need to be super disciplined because you could lose a fortune when it's trading sideways and doing nothing. But the big point I want to talk about is the fact that when the market tells you something, pay attention. You know, it's kind of like when you start dating somebody for the first time and they tell you, I just want to tell you I'm crazy. You should listen to them. There's no other way to put it. And right now, the market's saying, I'm not going down yet. I'm not ready to go down yet. All of us as active traders have to pay attention to that. There will be a time when that happens. I don't know when. The market hasn't told us it's ready yet. But what we really got was a push up and a pause. This entire week was a consolidation heading back to last Friday so far in the market. There's been some individual stocks. So the point that I really want to drill this home is this is why it's so important to read the tape, put together your argument for whether you want to be long or short, and stick to it. Don't let a 5-minute decline that happens in the middle of the day, or one day even for that matter, if you're swing trading, influence you to change your thought process and your game plan because one day was different from what you just built this giant argument for. And right now the argument is still long. We made it very clear coming into the day that we would be watching the market and the SPY specifically on the weekly chart, that it was still well bid, and we'll take a look at the chart in a second, but we were very clear that the bias remains long unless 277.14 gets below that price and stays there, and then we'd have a bearish U-turn on the weekly chart, which is a potential reversal, because it's not yet, because we're still well bid, where we have higher highs and higher lows over the last couple of weeks. But what is another interesting thing, if you remember back, I believe it was Tuesday, we had drawn a chart where we said that the SPY specifically rallied to a 50% retracement level, and that's where you anticipate. Remember, whether it's moving averages, stochastics, or whatever it happens to be, those are anticipated reversal levels. You still need to confirm it on the charts, on the candlesticks. And right now we pushed up, and now we're pausing. And as of right now, there's no reason to look on the short side. As a matter of fact, I'm having a hard time. This is actually a good point. To be an awesome professional, to feel like you're in control of what you're doing, even if the market's going straight up every day, even if, right? My cat just broke through the door. You still want a game plan for both sides of the tape. You still want a game plan that says, here's my strongest argument right now. The market's strong, internals are strong. I'm going to just look for spots to get long. That's the stronger A-plus type trade. The market's doing something obvious. You want to find stocks and sectors and industries that are doing the same thing. But you should still look to the other side of the tape, because what if it's a reversal day in the market? What if the market opens higher tomorrow, trends down the whole day? You still need, assuming you want to initiate a new trade, you still need a list. You want to be prepared with that before the market opens. You don't want the market to open and then start scrambling, saying, oh my gosh, this is a negative day. Now what do I do? And you're all over the place, and you don't have the same conviction. When you do the list like we're doing now at night, and you review it again in the morning, you have a lot of conviction because you did the work. And that's what separates an amateur from a professional. And I'm not saying professional in the sense that you're quitting your job. That's not what I mean. What I mean by professional, I mean somebody who takes it seriously, somebody who acts like a professional, whether you're doing it full time or not. You want to approach this like a business. This is a trading business where you are a risk manager in charge of leverage, profit potential, and managing the downside. So professionals will build those arguments. Professionals will have stuff on both sides of the market. And if the market, and when the market does have a negative day or two, you're going to be prepared already with the stocks, instead of like going all over the place and reading the news and trying to find something to trade. And that's a part of trading that a lot of people don't seem to believe, I guess, because there's so much stress in trading, and you get caught up in the emotion of how difficult trading could be. But I'm here to tell you, if you're prepared when you go into the day, the right thing to do is you just build all of those arguments for an idea, or for a bunch of ideas. Only trade those ideas. You should just be sitting back and saying, okay, in these 4 stocks, I'm looking to do nothing but buy them. So I'm only looking for buying opportunities in those stocks. For these 3 stocks, I'm only looking for opportunities to sell short. So if it wiggles and jiggles and goes all over the place, you're still only looking at one side of the market. And that's where trading becomes a process that you are in control of, as opposed to hoping something happens in the market, or the market just happens to give you a really big day, and you make money because anybody could have made money that day. But you don't want to be anybody. You want to be somebody special who's prepared. And hopefully that you can learn from my experience of what it takes, and you're writing a whole bunch of notes out of this. So anyway, we're gonna go into the charts. Today's game plan is mostly on the long side, other than maybe a couple of financial stocks, and even that, the reward potential on them has diminished a bit. So if you actually did trade today, you can see we have a mix, I guess is the only way to put it. And if you were a little bit frustrated today, you can see why. It's not all red or all green. It's all over the place. You will notice the financials, as we've been harping on the last few days, this week specifically, those are the stocks to be looking to short sell today. And we also did say we'd be looking to get long technology stocks. You can see Microsoft and Amazon got some follow through. United Health and CI, Cigna actually had a good day today. We're going to take a look at that as well. So that's really kind of where we're at right now. But if you felt kind of frustrated as a day trader, the market was tough. This was a day to go and find individual stocks. And if you had your list, you were prepared. So anyway, we're going to get into the list. We're going to first look at the weekly chart to identify what we just discussed. And that's basically here. The week never went positive, but we're sitting around that same number again, right? The opening price, 277.14. We're still well bid, but you can clearly see here this week is a melted candle is the terminology that I use, or an indecision candle because it opened and closed in the same spot, but we are still well bid. So really the game plan coming into today is still valid tomorrow because nothing has really changed. And we're still only a stone's throw away from being negative, which is a reversal of the momentum, not a reversal of the trend, because right now this is the short-term trend. This is the 3-week trend, right? So if we go to the daily charts, you can see that it's even more tight, right? We have now 5 melted candles in a row, 1, 2, 3, 4, 5, dating back to last Friday. So we got a push up and a pause. That's actually healthy, quite honestly. That's actually healthy. Now, what you really want to see for it to be perfect is you want to see it on declining volume, which we got that too. So ironically, we're actually trading a little bit higher now after hours. I'm not going to get into after hours. It's a whole other animal because we're just talking about trading, regular trading hours here. But from a argument perspective, it's a long unless we break that 277.14 in the SPY. And even then, you should have a list, as I just explained, to trade on the other side. This really gets drilled home when you look at the hourly chart, and you can see this is basically where we are. There's really not any kind of momentum. So the intraday charts on the indices, you really have to be on top of your game to pull the trigger exactly where you want. I don't want to go down, drop down too much intraday, but this is what the SPY was like today. So you can get an idea of, this is where we were looking to shorts. Let me pull this out a little bit. This is where we were looking to short sell this trade. This was actually the better trade of the morning. If you wanted to be actively trading the SPY on the short side, it was below the opening price. You had an inside candlestick breakdown here. So a really good opportunity for the short sale. And then this was lining up as another one. And this was the spike I was talking about. And we was like, where did that come from? We actually ended up trading through the opening price and then trading all the way back down to the lows again and trading all the way back to the high. So my point is this. My point is it's not plus or minus about day trading. I'm pointing out the kind of market environment where you can really get slapped silly and you could drain your account without the thing even moving. So that's the bias for the market in multiple time frames. The weekly chart, the weekly trend is still there. That 50% moving average is still have a hard time getting through there. So what we're going to do now is we're going to take a look at some stocks. But I want to talk about a couple of them that actually either had earnings or had an explosion in price action and volume. So these ones I'm going to pull out now, you can see how exaggerated ABT actually spiked up earnings, double normal volume. But here's the interesting thing. We have now got 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row of well bid. The last one with double normal volume and a large range candlestick taking out 20-day highs. On its surface, you'd be like, gosh, I'd really love to be long there. I'm going to get long that stock tomorrow. Here's what I'm looking at in this stock tomorrow. If this stock opens higher tomorrow, I'm looking for profit taking. I am not looking for a spot to get long. That's what I call a saturation point. As we've discussed previously, saturation points, or what I also call is exhaustion. Exhaustion is after a momentum move, where the opposite of that is fuel, where it's a consolidation breakout. This is after a long momentum move and a big spike and a large candlestick. Generally speaking, means you move up your trailing stop because we're expecting it to reverse, because the buying pressure that pushed it up has now exhausted itself. So I want to make it clear, as I discussed in this morning's video, that's not a spot to get short. It's a spot to tighten up your trailing stop because of the exhaustion in the price action and volume. So very important. The other one that matched that same criteria was Amazon. Very similar, where you would not necessarily be looking for a short, but look at Amazon, double normal volume, and you can see we closed off the high. So if I was looking to get long Amazon, I would not be buying here. There's 1, 2, 3, 4, 5, 6, 7, 8 days in a row of well bid with exhaustion candlesticks. So this is where, if you happen to be long Amazon on this breakout that we called last week, which again, very clear, that's why that line's there. We said a close above here is the long. So we're talking about 1960 to 2440, pretty good profit, right? So on that move with this exhaustion, that's where I personally would be moving up my trailing stop to lock in those profits. That doesn't mean to bail, and it doesn't mean to get short. I want to be clear on that, because people say, well, if it's not a long, should I get short? No. Absolutely not. Two other stocks I want to take a look at. Electronic Arts. This sector seems to be heating up a bit. I'm going to remove the volume now. Electronic Arts, you can see, actually broke through new 52-week highs. We got this resistance here going back to 2018. So here's the play here. You can see not a lot of clean energy type candlesticks until recently. We have this resistance here at 114. We discussed this resistance level today. We popped through. I'm looking for a pause up in this level. So this is going into the tracking journal. So EA as well as ATVI, similar type price action, but this time in ATVI, we're looking for it to pull back to 65, pause and look for that. So again, if you're long both of those stocks, keep trailing them higher. If it pulls back, those are the areas in my tracking journal where I'm looking to trade. We just looked at Microsoft, which is really kind of cool. We're getting a lot of interesting feedback in both emails and comments in the YouTube videos. What do you think about what's going on in Microsoft? Hard stock to gauge from day to day because we're gapping, going sideways, gapping, inside candle, gapping again. If you're long already, keep trailing it up. I'm not going to enter this until we get something like this again, where we get a couple of days of consolidation, because we've already gone 162.50, 177 and change. So $15 this week, not really what the stock normally does. Probably going to open higher tomorrow. I want to wait for the stock to pause or actually pull back before I personally get involved. If you're long already, keep trailing it up. No reason to get out of it. Again, like John Williams said the other day, there's no reason to get out. I'm not going to get out. And really, don't get out just because you're P&L. If you're worried about your P&L, you can scale out of some of it or trail it up. And if you get stopped out, Roku keeps on Roku and right. Bullish engulfing candle yesterday, open higher and pushed through today. Give you an idea what the 15-minute chart looked like. Now, hopefully, I'm training your eyes to say how long do I hold the trade. Well bid, well bid, well bid. 3, 4, 5, 6, 7 candlesticks. And what did I just say about Amazon and what I forgot what the other stock was? ABT, large range candlestick, followed by an inside candlestick, but more specifically, the large range candlestick after 4 to 6 candlesticks generally calls the top. I don't have the volume on this one, so I only look at that on 5-minute and daily. So you have a large range candlestick inside. So this part of the day in Roku was just superb to be long. It was just a question of where you got involved. The answer to the question I'm going to get asked is where is the easiest entry or the most obvious entry, and that's the opening range breakout, which is here. And you can see you got all those well-bid candlesticks after that. Again, I don't want to go down too much on the daily chart. But what about Roku next? Well, you can see you got this resistance here. So again, very similar to Microsoft. If you're already long, trail it. Okay, I wouldn't. Basically, we have 90 to 133.5, $40-something this week. Again, you never want to say it's too high. It can keep going. We're trading on probabilities, and we're coming into resistance. So I would trail it, looking for this resistance coming up here in the 135 area. But not initiate a new long into that area. Citrix System is one that we've been watching for a while as well. You can see that we drew this. We said we're looking for it to pause. This stock is very choppy. I had a few people email me about it. Yes, it's absolutely bullish with the rest of the market. But to me personally, despite the fact that we have now 4 closes in a row, 3 well-bid candlesticks, and we're breaking out, I don't like how choppy it is. For me, it would drive me crazy trading the stock. If it's a longer-term swing trade and you're already holding the position similar to what we've been talking about, trail it. There's no reason to get out right now. It just broke out to new highs. Look for it to follow through. If it doesn't, just be disciplined with if it pulls back. Another one that's been in the list pretty much every day, which I hope everybody's getting a piece of, this mRNA just exploded again. So really, again, we had a swing low here, a gap, trend day. So no reason to get out. I hope you're trailing these profits for those of you that are involved. JD was also one that we called out yesterday above this breakout level. You got some follow through here as well. So it's very tough to, my point is heading into the weekend, it's very tough to be initiating new trades in these positions. But I would absolutely be trailing if they're continuing to follow through. ANTM was another one today. This was almost an inside candlestick, but you can see, here's the point that I want to get across. Push, pause, push, couple of days, and another push. I don't like this long as much, and I think the reason I'm putting a couple of these in here is so that you can see that setups don't necessarily mean trades. You might want to write that down. So in this case here, we do have a nice push, but you can see we're starting to get into this area where we're having a hard time staying through. So I guess you do have about 20, 25 more dollars. So one more day up. Today it traveled 250 to 271. So if tomorrow on Friday does exactly what it did on Thursday, I personally would consider scaling out into that resistance of 300, which has been having a hard time getting through. UNH, which we discussed. Let's see if there's more there. Oh, this is a good one because Jerry actually called that in the group today too. Not that one. I'm sorry. I might have the stock wrong. But this is actually another one that's been well bid 3 days in a row, but some obvious resistance here. And we saw on Netflix this week that it can go through resistance and just keep going, but you have to be aware of it. So if it opens up into that resistance and it's pausing right around the 300 level in UNH, keep an eye on that, because if you start to feel like, maybe that's it, and you're long from lower levels, again, be aggressive and lock in those profits when it gets to resistance. Netflix didn't even give us a chance to do that. It just exploded through that level and kept going for 3 days and actually traded higher again today. But you can see we got that topping tail melted candle there up in Netflix representing indecision. Would I be getting long Netflix tomorrow? No, I would not be. I would not be initiating a new swing trade long in Netflix. Day trading is a different story. If it's above the open, we remain well bid and there's room to go. Absolutely. Next, we have work is one that we're telling everybody. We actually mentioned it yesterday, so keep it on your list. It's at this resistance level. It's having a hard time getting through. And exactly what I said, I don't want to be alerted this stock until it gets through 30, because it keeps getting up to this 29 level and failing. So today we got up to exactly 30. How about that? And we didn't stay above there. So again, above 30 is the trigger for work, which is slack. And I believe I hit everything already. The only thing on the short side I want to mention is the airline stocks. The only reason I'm not calling these out, well, number one is they're kind of all in a trading range again, right? And number two is they are in the news in a big way right now. And you could be looking on the short side in these stocks, and all of a sudden the government announces even more bailout than what's going on now, and it just spikes in your face. So I'm staying away from this because of the it's not so much unexpected news as much as the sector is in play right now, and anything can happen right now as far as good news. And when I say good news, meaning like that, you get a 5-day rally get shoved in your face because you're only looking to the short side because of what you think the future prospects are. So my point is I'm staying away from it for those reasons. I'm not telling anybody else or suggesting anybody else should. I'm staying away from it for those reasons in the sector. And again, the only short I really like here, I was obviously looking at, we talked about the trade in JP Morgan today. We could actually take a look at the one entry in JP Morgan today, which on the 5-minute chart, which was, again, right out of the gate. We actually below the previous day's low, this inside candle and down was a pretty good trade. And then you had another inside candle and down here. But other than that, on the daily chart, it's a little bit extended. I do like the short again down into 82 area. So maybe one more day on the short side. Bank of America, not as tradable, in my opinion. $21, not that much room to go. So again, all long tomorrow is what I'm looking for. I'm game planning, JP Morgan, maybe Goldman Sachs on the short side if they stay bearish below the previous low, below the opening price, and have a little bit of momentum to trade. The market is pointing higher today. If the market trades, the weekly chart is still pointing higher, but we do have that line in the sand of Monday's opening price still within shouting distance. But unless that happens, the better trades are on the long side. So that's what I'm going to be looking for. Those are the stocks that are getting my game plan, either trailing up stuff long already or looking for stocks that have room to go. Now, here's an interesting thing. A lot of these stocks that are super strong, that have kind of resistance levels above, if they open lower, they're still good trades, because you'd actually almost rather they opened lower, found a bid, and rallied. I forget every day. Last 3 days, I keep forgetting about it. The stock that I mentioned, this is actually a good example. The stock that I had mentioned the other day, where I had said a bearish gap down in a bullish price action. So obviously you can see that there. The bearish was NVIDIA. Everybody's asking me in emails. I keep forgetting. I said every beginning of the video, I keep talking about it and I forget. That was this year. So this is essentially what I'm talking about for tomorrow in a lot of these stronger stocks that we're mentioning that might have limited room to go or maybe some exhaustion. If they open lower, very similar to what you see. I'm not even showing you the chart. If they open lower, like we are seeing here in NVIDIA, where the daily chart has some good solid bullish price action. Here you can see on Wednesday, gap lower, you look for this kind of stuff because you're actually increasing the distance between your profit target and your potential entry with the gap down. So bearish openings tomorrow in bullish stocks are considered a good buying opportunity. And most likely the first profit target would be the previous day's high, assuming that level is far enough. We might see that in Netflix tomorrow too, because we're actually trading a little bit lower in Netflix now. So that's the game plan for Friday, April 17th, Friday, April 17th, 2020. The thesis is the bullish trend is still in play unless the momentum turns. So you have that level, 277.14 in the SPY. If you have any questions, absolutely leave a comment. I would really appreciate it if you also click down and subscribe. That would mean everything to me, so we can pay back each other for this valuable time we spend together. So have a great night. Have a good day of trading tomorrow. Look for tomorrow's stocks for breakfast, usually around 7:30 in the morning. And also, we're going to be doing a live version of this most likely on Monday mornings going forward. I'll send an email to everybody in the list, and I'll announce it here in the video as well. Announce it at the beginning of a video in case you don't make it all the way to the end. And be safe, everybody. So have a great night. Take care.